Hello everyone. Welcome to the second episode of Finance Ke Funde. I am Shruti and
I am Vikash
and today we are going to talk about how investing journey evolves through life stages. हम 20s पर कैसे behave करते हैं? How do we really take money decisions? How does it change once we move into our 30s and so on? And I think this is going to be a very interesting episode because this is going to be so much about our journeys, our experience, our reflections, our mistakes, and I'm sure that some of you will be able to relate to it.
Yeah, Shruti, I agree with you. This is going to be an interesting one. And after several years of investing and with the last 10-20 years, I've seen that the journey with money, personal finance, how you think about personal finance evolves. So how I was thinking in my 20s is quite different how I'm thinking in my 30s. So now when I think about my early years, I was not thinking too much about money. This is what I feel because I had a lot of privilege. I saw quite a comfortable life. I was going to one of the best schools in my early years, and most of the things which I wanted was easily available to me. But yeah, what happens is that once you start entering into the job world, when you are on your own, you start thinking about money quite differently. And that happened with me also. When I was young, I used to see that my parents used to invest in traditional instruments, and I was one of them who used to keep those NSC certificates. Those at that point of time, when I look back now, it feels quite weird. But at that point of time, that was a problem actually, that you have to keep those NSC certificates in physical, very meticulously. You have to go to your agent, go get those renewed, and then you get that money. Now things have changed a lot. And also what I think is that my father started his business, and because he wanted a lot of security, so most of the conversation was about you should save more, and most of the investments were also in traditional investments also. Looking back, one more thing what I feel is that in that generation, people who started investing in their in 1990s, they had a very big impact because of the Harshad Mehta scam, and that had happened in my family also. My father had lost some money. After that, he got just more attached towards FDs or traditional instruments. So what I can think about this is that whenever you're investing, you can see historical returns, but how you invest your own money depends upon your own experience about the financial instruments that you invest in. So these are some things which I think happens with money.
Because I resonate with a lot of what you are saying. I belong to a middle class family, and growing up, one of the key things that we learned about money is that it's a means to achieve some things that you want in life, the kind of life you want to live. And like you mentioned about the Harshad Mehta scam, in Calcutta, if you go to our community, you will see a share trading terminal in every single office, right? So everybody is into equities in whatever capacity that they feel comfortable. But my family lost some money, even the 2000 wala scam, right? So what we also learned is कि there's no shortcut to making money. आप फटाफट तो पैसे नहीं बना सकते हो. And again, growing up, I also saw, even in my extended family, that a lot of money was parked in tangible assets and traditional assets. So while on one hand there were a lot of FDs, LICs, NSCs, like you mentioned, on the other hand a lot of money was parked in, let's say, gold, real estate. And I think that is why, when I first started working at an age of 24, I did nothing about my money, for the first few years. I remember that, my first investment was only to save taxes, right? It's such an irony that we are in this profession today, and I'm just talking about maybe 14 years back, right? And I did nothing about my money. And I think that, and even in my network of friends and colleagues, we weren't having these conversations, about investing, about growing money. I think the focus was on work. But what I'm seeing in the current generation of 20s, things are very different from how we used to behave. People come with a very polarized, so there are two polarized sections actually. One kind of individuals in 20s are those जिनको कुछ भी नहीं पता है, नहीं करना है, या बहुत डर लगता है. So they are not, their money is lying in the bank. They are not aware. They don't know what risk they are playing with. So they, the indecision becomes a decision for them, and the money is just lying in the bank. And then there's a second, polarized group of individuals whose interest is in making, very high returns. So their first investment would be, let's say, Bitcoin or futures and options. So they have not decoded risk really. They have not really thought about what risk they are taking, but what they are aiming at is, let's see if we can make good money. And you're right, at that age they do it with small amounts of capital. So in the long run, it's not going to matter. But these are two different risk mindsets that people are now coming with.
Yeah, I agree, Shruti. So, and when we see the like data which is coming from SEBI, like how many people are trying futures and option, and there's a very very clear tilt that most of the futures and option is being tried by people who are under 30. The good part about it is what we already have discussed. The bad part is that if they are taking loans for that, then they are like a very very big like recipe. It's a recipe for disaster. But if they are trying with their own money, we cannot stop it, and maybe that is a choice that somebody is making. But there are the other section which you said, that who are not able to know what to do and there is an indecision. For them, I think the world has changed a lot. When I was in my 20s, there was very very limited information about mutual funds or on the digital platforms. But now I see that there's a lot of like information, at least, that what is a mutual fund, how they can invest, and because of that maybe they are able to reach out to someone, so they know at least that there's a product called mutual fund, and in mutual fund they have to invest.
Yes, I agree with you because I think the campaign of mutual funds Sahi Hai, which AMFI had run, has had a significant impact on how mutual funds have penetrated even in the tier 3, tier 4 cities. I mean, that's the whole reason why people now know mutual funds, right? But what I think is, the reason that there's a section of people in their 20s who invest in risky assets in lieu of good and quick returns is also because I think nobody has really seen in that generation, and even our generation, nobody has really seen a massive risk event playing out in the financial markets in the last 10-12 years. So there has been volatility, there have been a few weeks of markets going down, and as we speak the markets once again look very volatile, but nobody has really seen a sustained drawdown, a very sharp correction which looks like the world is coming to an end, right? And I think that shapes your mindset very very differently. What do you think is your definition of risk in financial markets?
You are absolutely right, Shruti, that last 3-4 years anyways we have seen a very very big bull run where there is no correction at all. This is the first one where we are seeing some correction. On top of that, when we see the data from the last, like say 10-12 years, Nifty like headline index had just one negative year. So these are like times when you have seen just the good part about the market. So what I think about risk is, first, see, risk, like everybody says that risk is permanent loss of capital, volatility is not risk. That I also agree. But one has to understand that with volatility, you have to see certain drawdowns in your portfolio. So क्या होता है कि जब आपका significant part of net worth invested है, and when you see that drawdown on that invested capital, तब आपको अपनी actual risk appetite पता चलती है. उसके पहले आपको लगता है no, there's no risk आएगा, I'll able to manage. So when I have any conversation on risk with my friends or with my family, I say that you have to know your risk appetite during drawdowns. So if जब market गिरता है, अगर आप अपने decision को उस समय question कर रहे हो, that means maybe you are over allocated to the markets. And अगर आप उस समय you're fully comfortable, you take the drawdown by your side and you're very very rational at those times. That means that you are properly allocated towards the assets that you should be allocated. So risk is very subjective, and one has to assess his risk appetite during drawdowns and not during the upturns, right? So this is what I think about risk.
So because since we're talking about early years of investing, tell me, what is your ideal way you would recommend a 25-year-old to invest today in today's financial markets?
Yeah, so for a 25-year-old, first I think it will depend upon what kind of salary he is having. But what I think is that if your salary is even nominal, what you have to target is that you have to target at least 10-15% of your money going towards some kind of growth asset, which can be mutual funds, which can be equities, direct stocks, whatever you are comfortable with. For high earners, it can be higher range also. But the idea is small percentage of your asset going towards a recurring investment is that you start appreciating the behavioral importance or behavioral advantage that you have when you do dollar cost averaging. So that is something which I will highly recommend to everyone. On top of that, there is a lot of like social media, like there is a lot of people who will be giving gyan कि आप सारे save कर लो, you don't. So I'm not in that camp. I believe that you have to balance things out, right? And at that point of time, if you are saving some money and rest if you are like spending on things, experiences which makes you happy, I think that is a very very individual choice, and you should not listen to what others are saying, but you should make a decision of your own.
And this is important that we experiment with products in our 20s, because as we move into our 30s, I think our milestones change and the way we think about life changes. For me, a lot of clients who come to me and they are in their 30s or mid 30s, there are two things that they talk to me most about. One is goals and one is equity in their portfolio. So, the whole conversation changes when you step into your 30s and your life progresses. And the shift is very interesting, because we have grown up always hearing save, save, save. And once you step into your 30s, you suddenly also start realizing that fixed deposit is no more the only way you can actually save and, achieve your financial goals. So that shift has also happened.
Yeah, Shruti, so I think I also agree with you. And like when I look back how things get evolved is that you see that your parents were from a generation, at least I come from a middle class background, so I hear that news stories that there are a lot of families who were doing equities at an early age, but in my family the equity exposure was quite low. The prominent reason was the lookout for safety. Now when I think about safety has two components, right? One is that you are not okay with volatility, but when you're not okay with volatility, you're also taking a risk which will impact you after 20 years. So people are not able to visualize that inflation risk after 20 years. So when I started reading more about like financial markets, when I started understanding it, I understood that if I'm not taking this risk, there is a risk that I'm exposed to at the age of 50. So in my after 5-7 years in the industry, you start appreciating that some portion of your assets has to go towards growth asset, and the reason is that it is also compulsory in some way. So I'm not someone who has unlimited resources and parking in an FD will solve my 10-20 year problem. So I have to allocate some money to equities to solve my problem which is 20 years away. So in my 30s I started appreciating this fact, and then when I started seeing like my personal portfolio, my family portfolio, even clients portfolio, what I started observing is the allocation to growth asset is actually quite low. So people think in absolute numbers. So the thought process started changing from absolute to relative. So this is one of the biggest thing that I started observing is that I'm not thinking that I have allocated 20 lakhs to equities or I have allocated 50 lakhs to equities. The thought process started converging to what percentage of my asset is exposed to equities, and if it is say 20% or 30%, I'm not taking inordinate risk. So these kind of thought process change in my 30s started having an impact actually on my net worth as well. So these are certain things which I started observing, like what I'm trying to prioritize in my 30s.
A lot of people, a lot of friends I talked to, in fact last weekend I was sitting with a friend and one of his questions was, Shruti, can I afford 10 lakh ka travel? So hota kya hai ki, especially in a lot of people, couples of our age where both husband and wife are working, इतना कैश फ्लो आ रहा होता है that you feel that you can afford higher expenses, आप lifestyle भी increase कर लेते हो. And again this takes me back to one more conversation I was having a few weeks back, and that particular girl was telling me that look, I make 3-4 lakhs a month, but मैं कहीं भी घूमने नहीं जाती हूँ because I'm always so worried about the future that I'm not being able to spend. So I think financial planning is not very prevalent in India, unlike the West. But I think financial planning is very important once you have stepped into a stage of life where there are so many other variables which influence, your decisions, your lifestyle, your dependence and other responsibilities that you have.
So to summarize, as we grew from our 20s to 30s and mid 30s, we realized that the mindset shifted from experimenting with different products and looking at returns to thinking about financial goals. In our next episode, we will take this conversation a step forward and think about how this mindset evolves when we move into our 40s, 50s and thereafter into our retirement. So do stay tuned for our next episode and do subscribe to our YouTube channel. Thank you.